Hey all, welcome to ShareTreck. Good morning. It's the 11th of May 2022 and we're on our daily update. The question I have now is, are we in a bull trap? Are we going to end up buying, assuming that this rally is going to persist, only to find that everything is going to fall down? So we need to examine that question. And we have the CPI Consumer Price Index coming up, which could be the key. So let's get started. Here are my set of headlines that I have created for today. That's what I mean by today's headlines. They're not headlines taken from newspaper or something like that. So the first headline I would like to offer is that we are still in a bear market, especially with Nasdaq, which has dropped more than 20%. And therefore, the rallies that happen in this market are bear rallies, and we cannot trust them until they form upward trends that are validated. What I mean by that is you are now familiar with the diagonal lines that I draw on charts connecting lower lows and higher lows. So we need a series of higher lows to happen in our rally in Nasdaq so that we can draw a channel that has at least 3 touch points that is sloping upwards, and that would be a validation of a bull trend, and then we can have a little more confidence. But right now, whatever spikes we may have, they are tentative in my opinion. All risks are still in place, and that's one of the reasons why I think that we are still in a bear market. Russia-Ukraine is not solved, supply chain issues are not solved, China issues are still there, China issues related to COVID, zero COVID policy and lockdowns. Tight labor markets are still in place. So all these things do not lend themselves to a bull run yet. So one of the issues that we have is inflation, and that issue is going to be addressed today, and we can get some relief if the CPI reading is in line with market expectations or better than market expectations. So we got to focus on that. And the economists are expecting 8.1% year-over-year headline inflation. And if we come anywhere below that, that's going to be a good sentiment for the market, and that will also allow the Fed to be a little less hawkish, and in turn that will boost the market sentiment and take us closer to a bull run. Here is a chart that shows consumer price index less food and energy. So this is what the projection looks like, and if you look at expectations for May, it was at 5.1, and for April it was at 5.6. So if we see an inflation number of less than 5.6 for all items less food and energy, then that would be a positive as far as the market is concerned, because we have come below expectations. I'm now on the BLS website, and I'm going to do a bit of drill down on all these charts to see if we can get an idea of what are the biggest drivers of inflation for us. And then that will give us an idea of what to expect at 8:30. It's around 8:21 a.m., so I'll cover that also. So we have the overall inflation at 8.5%, out of which food inflation is 8.8% of this all items. And energy forms the bulk. Energy inflation is around 32%. And all items less food and energy, which I showed you earlier, it's around 6.5%. So if we were to look at, let's go and look at food. So food at home, unfortunately, is more expensive than food away from home. This is a paradox. But still, let's go ahead and look at energy. In terms of energy commodities, 70.1% is from fuel oil, and 48.0% is from gasoline. So even if we don't get too much relief on the gasoline due to falling oil prices, there is going to be some relief in fuel oil. So we can definitely expect, given the fact that oil has been dropping for almost weeks, that there's going to be a good impact on the consumer price index by bringing it down. So oil is going to play a positive factor here, in my opinion. And then if I was to go into commodities, less food and energies, and then drill down, so new vehicles contributed 12.5%, used cars and trucks contributed 35%. I have read in news that used car prices have come down. So that means another point that's going to bring down the inflation for us when the report comes in. So those are the things that I can observe from here. And then going back into all items less food and energy, if we look at shelter, 5.0%, and if we look at Medicare services, it's up 2.9%, and transportation up 7.7%. So definitely the price in oil, price of oil going down should have some impact on transportation services. This segment is talking of services less energy services. So we can assume that the fuel component of it is taken out from here. So I don't know how much transportation services is going to be impacted, but to the extent that spare parts like tires and engine components and everything, if they become cheaper, then there's going to be a change out here. Also, labor conditions are expensive, truck drivers are expensive. So if there is any relaxation out there, so I don't see much coming out of the transportation services less energy category. So that is not something that can give us relief. And in terms of food, food at home, if I take a look at this, non-alcoholic beverages and materials are up 8%. Fruits and vegetables are up 8.5%. Meats, poultry, fish and eggs are up 13.7%. Cereals and bakery products, so dairy related products. So the cheapest among them is the dairy related products, meats, poultry, fish and eggs. So wherever processing is involved, I would expect that the inflation is not going to come down because labor market is short and also energy costs are high. Cereals and bakery products, this is likely to be affected by the fact that there is going to be a shortage of food grains due to the problems in Russia and Ukraine. So I don't expect much relief in any of these areas at this point of time. Having said that, there is a good chance that we may come within expectations for CPI. Here is a chart that shows the CPI expectation, and for March the expectation here is 8.0. The source is UBS and Bureau of Labor Statistics. There are other expectations of somewhere around 8.1 elsewhere on the street. So anywhere from 8.1 to 8.0, if the CPI reading happens to be in that range, then we can see a positive reaction from the market, a little bit of relaxation that we are in the right trend. However, if it was above 8.1, then the market is going to probably tank a little more. With that said, it's almost 8:30. Let me go and check whether the CPI numbers have been released. And if I can get a snapshot, then I'll come back and complete this video. Okay, friends, so here we have the Consumer Price Index released at 8:30 a.m. May 11, 2022. And we are reading directly from it. The Consumer Price Index for all consumer items, CPI-EU, increased 0.3% in April on a seasonally adjusted basis after rising 1.2% in March. The US Bureau of Labor Statistics reported today. Over the last 12 months, the all items index increased 8.3% before seasonal adjustment. Increases in the indexes for shelter, food, airline fares, and new vehicles were the largest contributors to the seasonally adjusted all items increase. The food index rose 0.9% over the month, as the food at home index rose 1.0%. The energy index declined. As we expected, the energy index has declined in April after rising in the recent months. The index for gasoline fell 6.1% over the month, offsetting increases in the index for natural gas and electricity. So we got a good support from oil. The index for all items less food and energy rose 0.6% in April, following 0.3% advance in March, along with indices for shelter, airline fares, and new vehicles. So that's how it has been. So unadjusted for end of April, 8.3. So we have come above our expectation. So the cool down has not apparently started yet. Therefore, expect the market to throw a bit of a tantrum today. We'll find out when we look at the futures in our next segment, when we look at Nasdaq and the indices. Let's start our analysis by looking at the futures. Nasdaq futures are marginally down minus 0.3%. This is a very small percentage, doesn't mean much. It can go either way. So we don't have a clue out there. Now let's go to look at the indices. And the first thing I'm going to look at is oil. Oil has gone up marginally. It's gone up 3.47%. So it's tracing back, but it's still below yesterday's open. So we still have some hope, and we have a very strong resistance from the 9-day and the 20-day exponential moving average. And also, as you can see here, the MACD has crossed over to below the signal line and it's moving away. The only concern I have is that the momentum is picking up out here. So if the momentum was not picking up, I would have said we are all right, but there's a good chance that oil may pick up during the rest of the day if the momentum continues rising. If that happens, that's going to be a bearish indicator for us. Now let us look at VIX. So this is today's candle, 11th May. And as you can see, we have broken above the resistance of 3.98. So I'm going to mark this as a support now going forward. And this is not a good development. As VIX goes up, so does the pressure to push the Nasdaq down. So we have a problem out there. This is another bearish indicator. Oil is potentially bearish and VIX is bearish. Also the CPI news that we got is bearish. Now let us go and look at the US dollar 2-year. The yields are picking up, which is not good for shares in our category, risk on shares. So that's again another bearish factor. US 10-year is also picking up, and it has got support from the 9-day exponential moving average. It has a resistance at 3.057. So if it bounces back down from there, which is as it has already done, and continues to go down, that will be a positive catalyst for risk on shares. But right now it's on an upward trend, so it's indicating a bearish bias. And then if we look at the US dollar index, as we have mentioned before, when the US dollar index goes up, that means funds are all going into US dollars, and the funds are going out of stock market and gold into US dollars. But today we are seeing a very thin, I would say, inverted sword kind of candle. So it's still in the formation, but it's above yesterday's close. So US dollar index also is indicating to us that there is a bearish bias to the market today. Now, if I look at S&P 500, we don't have any candles for today. We'll go to QQQ because it's a real time, and we can see that pre-market QQQ is down minus 1%. So QQQ is also indicating a bearish start for the day. So as we go through the day, when various participants and influence makers start analyzing the CPI index, based on their interpretation, there might be a bit of a swing in the market. But personally, I feel that the CPI index has shown that the interest rate hikes have not yet yielded the required result. Now let's look at US oil once again. You can see that we hit the peak of US oil on 8th of March. So I'm just going to take a scale tool from here and try to measure where we are right now. So we have dropped 23.27% from the height of oil prices at this point of time. Sorry, I made a mistake. I have to be at the top of the green candle here. That's around 102.59. So let me do this once again. Sorry about that, my friends. And here we go. Around 20.04% drop in the price of oil. Even that has not allowed us to come closer to the expectation that the market had of anywhere between 8.0 to 8.1% CPI. We came in at 8.3. Therefore, there are going to be a few things that is likely to happen, in my opinion. First thing is that the camp which was talking about 75 basis point increase is going to become more vocal, and that's going to seem more plausible. And in turn, that's likely to spook the markets. It may happen right now, or it could happen maybe towards the end of the day or tomorrow. But overall, given the fact that all the risks remain unmitigated, our hope was that CPI would come somewhere between 8.0 and 8.1, but it came above that. All those things, the US dollar index, and the balance of all the indicators that we have seen so far, everything is indicating bearish. So be careful in the markets today and hope for the best. So with that, I would like to end the Nasdaq analysis section and go on to look at cryptos. Crypto is not giving much of a clue here, because Bitcoin seems to be rudderless and it's blindly following Nasdaq. and it's resting on a support at 28,993 at this point of time. It has bounced back once, but we don't know whether it can hold because the MACD is moving further away from the signal line, bearish, and also the momentum has dropped way below any civilization zone, which I talk about between 70 and 30. Bitcoin is looking terrible at this point of time. And if you look at gold, gold has also dropped 0.07%. It's a marginal drop, but all this money has gone into the US dollar index. That's how I would look at it. So my friends, today is going to be another terrible day. With that, let's go and have a look at our Genomic shares. So here we are with our Genomic shares. On the right side panel, you would see that I have organized them according to the best share on the top. Bluebird was the biggest gainer yesterday, and it has formed a gain of around 15.62%. And we can see that the momentum is just about picking up, and the MACD is also bullish, moving away from the signal line. We need to maintain the momentum in order to continue having the gains, or else we are likely to lose those gains. Verve is up 9.93%, formed a perfect doji candle, restrained by the 9-day exponential moving average. And MACD is bearish. Momentum is just about picking up, not looking very strong. CRISPR Therapeutics is up 9.44%, absolutely bounced off the support of 44.27 neatly. And it's right now being constrained by the 9-day exponential moving average with a bearish MACD and a weak momentum at this point of time. Caribou Biosciences is up 9.3%, and it's being constrained by the 9-day and the 20-day exponential moving average. MACD is bearish, momentum is below average and just picking up. These are all as of yesterday's status. Today, the time is around 8:58 a.m. The market has not opened. So I'm just looking at what happened yesterday. So Caribou Biosciences is up 9.3%. And again, constrained by the 9-day and 20-day exponential moving average. In all the cases, you will find that we are being constrained by the 9-day and the 20-day exponential moving average, and we have a bearish MACD. So it's a copy and paste kind of a situation on the graph for most of the Genomic shares. And overall, for all of them, I would say that everything is going to depend on the market sentiment after the CPI index. I believe that it's going to be a bearish market, and we are likely to give up most of the gains that we had yesterday. Now let us look at IDNA. IDNA pre-market has got no trades, and IDNA gained marginally. And this setup out here is called as a bullish harami in the Japanese candlestick method, which basically means that we are going to have a bullish action going forward. If that comes out to be true, then we could see Genomic shares going up. But looking at the MACD, it doesn't look very likely because we are bearish, and also momentum is very weak, but just about picking up. But typically, whenever you have formation like this, a red candle foreshadowing a green candle the following day, and the green candle falling well within the body of the previous day's red candle, it's a bullish harami. So there is one positive indicator out there. Let us hope for the best, because we have a resistance out here, which is this diagonal red line, which has been with us for the longest time, and it has got multiple touch points. So it's a very strong resistance. So we have to break through that. So we'll see what happens today. Now for some clues, I'm going to look at Bluebird, and you can see pre-market Bluebird is down 5.19%. If you look at Verve, there is no pre-market trades. CRISPR Therapeutics is down 3.93% pre-market. Caribou Biosciences is down 5.35% pre-market. Beam is down 2.85% pre-market. So predominantly the bearishness as shown in the indicators in balance is weighing on the genomic stocks. So we are likely to see we are likely to let go of most of the gains that we have had yesterday. And what I would be looking forward to see is that how far do we drop before we bounce back up. And if that low is a higher low, then we can see the beginnings of a bull run. And overall, as I mentioned yesterday, we are going to be having a zigzag consolidation. We'll be moving up, then falling down, moving up and falling down, and be range bound for next 2 quarters until we get a drop in consumer price index and less hawkish Fed. That's when we'll start the bull run. That's my prediction. So with that, I'd like to end the session today. Thanks for being a subscriber, and thanks for being with this channel for the longest time. And if you like this video, please press a like there. And if you have not yet subscribed, please subscribe and join the community for everything CRISPR. Thanks and have a great day. Bye for now.